Stocks on Wall Street logged their fourth straight day of gains ahead of the Thanksgiving holiday. Tech stocks continue to rebound. The Dow gains over 300 points and Nasdaq gains nearly 200. Asian markets have opened higher, mirroring cues from Wall Street as tech stocks extend their rebound. The GIFT Nifty is indicating a strong start for our own markets. Crude oil prices have edged higher, bouncing back from nearly one-month lows as investors assess the prospects of oversupply. Gold climbs to the highest price in more than a week as hopes of a Fed rate cut continue to rise. The Union Cabinet has approved a 7,300 crore rupee incentive scheme to promote manufacturing of rare earth permanent magnets. Minister Ashwini Vaishnav says that the scheme could make India self-reliant in rare earths over the next 4 years. And India is all set to become a $4 trillion economy this financial year, but economists expect a 2-year delay to hit the $5 trillion mark, citing low inflation and a weak rupee. And the penultimate trading day of the week is here, and it might just end up being the day when the Nifty ends up making new highs. Not to jinx it, of course, but you're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Centre. I am Hormus Vatakia. So let's take a look at how the Asian markets have started off and mirroring cues from Wall Street. The Hang Seng being the only outlier here. It's down 0.3%, but the Taiwanese index is up 0.6%. The Japanese index, the Nikkei, continues to outperform 1.25% higher today as well. The Kospi 2 is up 1.25%, continuing to move ahead from where Wall Street left off overnight. So it's a largely green looking screen across the Asia Pacific. Some data coming in from China as well, where the industrial profits have dropped 5.5% in the month of October, which is the worst performance in the last 5 months. And that is the reason why the Hang Seng is turning out to be a bit of a laggard in today's session compared to the rest of the Asian markets. To pull up the GIFT Nifty, give you an idea of how our own markets are likely to start off, around about 45 odd points. So, well, based on yesterday's close, we might just open around that 26,250 mark within touching distance of that record high of 26,277. Let's see where today's sensex monthly expiry leads us to. But to set you up for today's trade, our research team is here with the trade setup, the stocks that you need to watch out for, and of course the setup from the F&O side of things as well. First up, Ekta joins in to get all the market cues you need to watch out for today. Ekta, good morning. And it's a strong rebound in yesterday's trading session, but what are some of the other important things you're watching out for?
Well, that is the key point, that the markets rebounded after 3 days of losses in yesterday's trading session, and what a rebound we did see for the markets. The Sensex Nifty near those record highs like you mentioned, so just about kissing distance for the Nifty. We have the Nifty Bank, which already hit a record high in yesterday's trading session, and 45 Nifty stocks which were in the green. We also had a good amount of participation in terms of the FIIs and the DIIs in terms of buys yesterday, so that will be one of the key indicators to see whether or not there is any kind of follow through in terms of the FII net buy that came through yesterday. Now, in terms of the US markets, it was a fourth day of close, so we had tech stocks which really rebounded. The likes of Oracle, which is an AI play, was higher in yesterday's trading session in the US. We have Asia, which is largely in the green, so maybe there could be some amount of follow through which could come through for the Indian markets. Now, the US markets are closed on Thursday for Thanksgiving, so not much in terms of cues coming in tomorrow from at least the global space or the US space. Now, in terms of a couple of key stocks to watch out for, just watch out for Whirlpool, which is likely to sell up to around 95 lakh shares via block deal, the Mahindra XEV9S launch, and India's first Tesla center is going to be inaugurated by the Haryana Chief Minister. So that is something to watch out for.
Indeed, Ekta, thank you for setting us up for today's session. Over to Ria now, who would list out the stocks you need to keep an eye out for. Ria, good morning. What's on your list?
Well, good morning, Homer. Starting off with Whirlpool, sources have indicated to us that promoters are likely to sell up to 7.5% of stake in the company via a block deal, and the offer size for this is roughly 965 crores. Asian Paints will also be in focus since the company's arm is going to set up a second manufacturing unit in UAE with an investment of 340 crores. LG Balakrishnan has signed an MOU with the Tamil Nadu government for infra support, and necessary approvals and incentives are also being gathered good for Oberoi Realty. They have signed a pact to redevelop roughly 4,706 square meters of land in Nepean Road in Mumbai. For India Glycols, the company has raised funds worth 467 crores via a preferential allotment of 51 lakh shares. Patel Engineering will also be in focus. The company has received orders worth roughly 798 crores for a coal project in Chhattisgarh. And lastly, M&M will also be in focus today after launching the electric SUV Mahindra BE6 Formula E edition today.
Launches galore in the SUV market. Tata Motors yesterday, M&M today. Ria, thank you for listing out those stocks. And lastly, Sudarshan joins in with cues from the all-important FNO space. Sudarshan, good morning. Is the data finally indicating that today may be the day?
Good morning, Harmas. As you said in the beginning that hope we don't jinx it. After waiting for several days, market is looking to hit the record high and crossing the earlier level of 26,277.235. Now, what do cues suggest? So global cues remain supportive. Yesterday also we have seen a big move in the global market, especially on the Wall Street. And now if you go by the FNO data, it does indicate that Nifty has formed a base and that base is above the levels of 26,000. So even if we slip, we might hold the levels above 26,000. So what has happened in the index future? Yesterday also FIs have bought more than rupees 790 crore and now their longs exposure has improved to 17%. Remember last month the low we had hit on the longs exposure was 7%. From 7% we have traveled to 17% on the short side. Again FIs remain heavily shorted but things have kind of improved over the last few days and 83% on the short side. One thing that has happened, look at the put-call ratio. Yesterday, we have seen it's moving higher to 1.42 from the level of 0.96. That indicates you the level of put writing that we have seen for majority of the options. All the options, 26,000 put, 26,100 put have seen huge increase in the open interest. 26,000 put has seen an increase of more than 1.19 crore shares. And for 26,100, there was an addition in the open interest of almost 78 lakh shares. And there was sharp fall in the premium. That fall was in the range somewhere of 50 to 60%. While in the contrary, on the call side, 26,500 call has seen an increase of 18 lakh shares in the open interest. And premium has moved higher to 34. And 26,300 call was healthy as well. So support for Nifty, 26,000 first support. If we fail to hold that, next support comes around 20-day moving average, that is 25,860. First resistance, the record high, 26,277. If we manage to cross that, next resistance comes around 26,500. Nifty Bank has hit record high, so we have just taken the support, and that support, first support remains around 59,000. Some of the stocks that are seeing fresh longs, Siemens has seen fresh longs. Samant Capital, unusual name, whole last week it was in the ban after that new Supreme Court order, but yesterday it has seen fresh longs, so keep an eye on that. Eicher Motors ahead of monthly data has been seeing fresh shorts, so keep an eye on that as well.
Sudarshan, thank you for that update and for the FNO side of things as well. And just to add on to the stocks that you need to keep an eye out for, keep an eye out on Paytm as well. And that is because the Reserve Bank of India has granted the certificate of authorization to Paytm Payment Services to operate as an online payments aggregator. Remember, this is the final approval. The in-principle approval was already granted to them in the month of August. So this is another development with regards to Paytm. The stock had ended almost 4% higher in yesterday's session as well, around about the 1300 levels. So keep an eye out on Paytm as well. Now, the Union Cabinet has approved an incentive scheme to promote domestic manufacturing of rare earth magnets with an outlay of close to 7,300 crore rupees. The initiative aims to create a production capacity of 6,000 metric tons. Here are more details on this.
India currently needs 4,000 to 5,000 metric tons per annum of rare earth permanent magnets, and the incentive scheme, which has been approved by the Union Cabinet, aims to achieve a production of 6,000 metric tons per annum in the next 4 to 5 years. So it intends to bring in self-reliance in the sector for India in the next few years. It remains to be seen which all companies are going to be a part of the incentive scheme, which remains open for both government as well as private players, and also the location of the manufacturing plants would be decided as and when the members, the companies would be selected who are going to benefit from the incentive scheme. The minister also indicated that India has a reserve of 6.9 million metric tons of rare earths, which is the third largest largest in the world. However, refining capacity needs to be upgraded since rare earth permanent magnets and also rare earths otherwise find extensive use across several sectors like electronics, aerospace, defense and automotives. And several companies had already expressed interest from these sectors as far as manufacturing of rare earth permanent magnets is concerned. So clearly, the incentive scheme is already out there in the public domain, and all eyes, of course, would be on how early the rollout is going to begin now.
Abhimanyu, thank you for
परमानेंट मैग्नेट की, और परमानेंट मैग्नेट को भारत में मैन्युफैक्चर करने के लिए आज एक रेयर अर्थ परमानेंट मैग्नेट्स स्कीम REPM स्कीम अप्रूव हुई है कैबिनेट में. माननीय प्रधानमंत्री जी ने अप्रूव किया है इसको. इसमें फोकस रहेगा एंड टू एंड कंप्लीट इंटीग्रेटेड मैन्युफैक्चरिंग सिस्टम बने, भारत में इंटीग्रेटेड मैन्युफैक्चरिंग फैसिलिटी बने.
Now, India is all set to become a $4 trillion economy this financial year. Now, 4 eminent economists have told CNBC TV 18 that the 4 trillion goal can be achieved even if the nominal GDP grows at a slower pace of 8% in the current fiscal. Sapna has more on this. Sapna.
Well, the first view that is coming in from economists across the board is the fact that the $4 trillion mark for the economy is extremely achievable, and that could be reached sometime as early as 2026. Definitely within the current financial year of FY26, maybe around the month of Jan, when the Ministry of Statistics comes out with its first growth estimate for FY26. That's the time when the $4 trillion mark could actually be reached. Now, this is going to happen despite the fact that the nominal GDP growth rate for India has kind of slowed down against what was anticipated in the budget. Plus, you also have you have considerable softening of the INR versus the dollar. So both the factors put together, a lot of questions have been raised as to what happens to the dollar-denominated targets that we have set out for the economy on various parameters. So $4 trillion is not going to be a problem. However, in terms of achieving the $5 trillion size, well, that's likely to be pushed back by as much as 2 years. Now, if you recall, way back in January 2024, the Finance Ministry had anticipated that by 2027, the $5 trillion economy would be reached, in the sense that India would become the third largest economy in the world. Well, that's likely to be pushed back by around 2 years, maybe by around FY29 is when that mark could be reached. Again, the reasons I have just explained. A weakening exchange rate, plus the fact that inflation has completely come off, which is basically pushing your, or rather pulling your nominal growth rate down because of these reasons. Well, we have to wait and watch and see. $5 trillion economy appears to be a bit far away, but $4 trillion economy is definitely achievable in the current financial year itself, and you'll be hearing shortly from the Finance Ministry on that.
Sapna, thank you for that update there. Take a short break. All the action from Wall Street on the other side. Stay tuned. Welcome back. On to Wall Street action. Then the indices continued their upward climb for the 4th straight day and are headed for their best week since late June. The S&P 500 gained around 0.7%, as did the Dow Jones. The Nasdaq was an outperformer, gaining 0.8%, and a rebound in tech stocks is what enabled this up move, along with, of course, the hopes of a Fed rate cut in December. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
The major indexes continued their climb on Wednesday in this holiday-shortened trading week. Markets will be closed on Thursday for the Thanksgiving holiday, and then we'll see abbreviated trading hours on Friday. The Dow rose 314 points. The S&P 500 jumped 47, while the tech-heavy Nasdaq finished up 189. Tech was led by online brokerage Robinhood, which announced a new CFTC-licensed prediction market after it bought 90% of Ledger X with partner Susquehanna International Group. Prediction markets are already Robinhood's fastest growing segment, though its partnership with Kalshi. But the acquisition will give Robinhood more control over listings and fees on its prediction platform. New data from Deloitte this week suggests consumers are planning to spend 4% less this year than last year between Black Friday and Cyber Monday, and 10% less on holiday shopping overall, citing higher costs of living and fears about the economy. As to how they'll be shopping, more consumers are turning to AI to help them with their lists. Accenture found that 77% of shoppers will use AI in their holiday shopping, up from just 40% last year. That's what's happening here in the U.S. Remember, tomorrow markets will be closed here in the U.S. Back over to you in Mumbai.
Bertha Coombs, thank you for that update there, and of course the Thanksgiving holiday in today's session. Let's also listen in to experts on the Fed rate cut expectations and the market reaction going forward.
In the last month, we've gone from over 90% in terms of expected rate cut to 30% back to 90%. That should not happen. The whole point of forward policy guidance is predictability and stability. And it matters not only for the US, but for the global system. And, you know, when you had Secretary Bessent on your air yesterday, he's absolutely right. The Fed officials should not be involved in play-by-play analysis. They should be providing a strategic outlook that underpins the rates market, not makes it volatile.
Coming into the year, inflation was decelerating, job growth was strong. It felt like we were going in the right direction. You know, based on our modeling, it looked like inflation would have been, if there had been no change in policy at the beginning of the year, looked like inflation was going to be back to the Federal Reserve's target, you know, something that we all feel reasonably comfortable with by now, you know, by the end of the year. Of course, we're getting something very different as a result of the policy. So if we want to get back on track, I'd say let's follow through on, you know, cutting back on the tariffs and kind of rethinking immigration policy and how we can get some reforms there.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Well, I'm looking at metals really, Hormuz, and that is because we've seen gains come back into this one. Gold, silver, both are trading at a 2-week highs. The markets are looking at weak U.S. data to begin with. So whether it has been retail sales, consumer confidence, consumer spending, labor market, all of that has come in slightly weaker than the street was anticipating. And that has led to the dollar index declining to below 100 now, below 99.5 as well, which is a 2-week lows. And when you look at the market's pricing in chance of a 25 basis point rate cut in December, that has increased to 85% right now. So that is where the support is coming in. This is also going to be the 4th straight month that you are seeing gains come in for gold and silver. For this year as well, gold is up by nearly 60% now and silver is up by 84%. The gains have also come back in case of metals. So whether it's copper, aluminum, by the way, gained 2% overnight. Zinc was up 2.5% as well. So very strong gains continuing for overall metals.
Manisha, thank you for that update there from the commodities market. Moving on to an unfortunate event, a massive fire is still burning at a residential complex in Hong Kong, killing at least 44 people and leaving nearly 300 missing. Police have arrested 3 men on suspicion of manslaughter in connection with the blaze, which began on Wednesday afternoon in the Wang Fu Court complex in the Tai Po district. Authorities say the safe scaffolding and foam materials may have helped the fire spread. Firefighters have been battling through the night with 4 of the 8 blocks now under control as rescue operations continue. Moving on to some updates from the US, 2 National Guard members are in critical condition after being shot in Washington, D.C., just a few blocks away from the White House. The suspect has been taken into custody and his motive is unknown, as reported by police officials. US President Donald Trump condemned the attack, calling it an act of terror and crime against humanity. He also said that the Department of Homeland Security has confirmed that the suspect came in from Afghanistan. Wrapping up with some good news, Ahmedabad has been formally awarded the hosting rights for the 2030 Commonwealth Games, marking the event's return to India after 2 decades. The decision was confirmed after the Commonwealth Sports General Assembly, in which all 74 member nations approved India's bid. The vote was largely a formality after the Executive Board last month recommended Ahmedabad as the host city for the century edition. India last staged the Games in 2010 in New Delhi. The selection followed a review process led by Commonwealth Sport Evaluation Committee. With that, we call time on this edition of Power Breakfast. From me and the team, thank you so much for watching. Bazaar Morning Call on the other side to set you up for the day's trade.